So earlier this week, the Bank of Canada raised their interest rates yet again. And I know we shouldn't be surprised, but I can't help but feel a little bothered by the situation. Now, I will say that my feelings are a little bit mixed. Let me tell you why. Back in October, the Bank of Canada not only promised us that the rates were going to stay low, they actually encouraged us to make a big purchase.
We're telling Canadians, and our forward guidance has been very clear, that we're going to hold our policy interest rate at the effective lower bound until slack is absorbed, so that we can sustainably achieve our 2% inflation target. And we've indicated that's not going to happen into some time into 2023. So what does that mean? Yes, it means that if you're a household considering making a major purchase, if you're a business considering investing, you can be confident that interest rates will be low for a long time.
It started a craze in the real estate market. People were going nuts. They were getting into multiple offers, competing with each other, and the rate of how high these prices were going up, I remember thinking to myself, man, this is not sustainable. And when I'm ready to buy my next home, I don't know how I'm going to be able to afford it. And I don't know how anyone else is going to be able to afford it. Because if that continued for the next, 12, 24 months, who knows how high home prices would have went. Because they doubled in Toronto and Vancouver, which was already extremely expensive to live in before the pandemic, they went up 30%. So when they first announced that they were going to raise the interest rates, I remember thinking, okay, that makes sense. But be careful what you wish for, because this is one of the most aggressive tightening cycles that we've seen in Canadian history. Who's paying the price for that? Everyone that bought a home in the last 12 to 24 months and decided to do it on a variable rate. You might think, they bought it on a variable rate, that's their problem. But mortgage brokers and even realtors, we recommended people go on a variable rate because for most of history, you're always benefiting. And the difference in payment of what it looked like a year ago versus now on, say, $400,000, one of the most popular price ranges in Edmonton, you're looking at a difference of almost $700. That's a lot. That's a car payment. Not a lot of people can just start spending an extra $700 and not have it affect their lifestyle. I keep reading stories about people canceling subscriptions. Netflix sucks anyways. No, I'm just kidding. But they're eating out less, they're buying less groceries, and doing everything they can just to make ends meet. So the good news is that we're nearing the end. The vocabulary of what the Bank of Canada is using is that they're going to consider whether or not they should still increase interest rates versus earlier in the year where they will increase interest rates. So if you're one of those buyers that bought a home in the last 12 to 24 months on a variable rate, I just want to say hang in there. It's a tough time. You gotta weather the storm. Things will come back to normal. If you're a buyer thinking about buying a home, well, there's no better time to get a good deal than now. You're essentially getting homes at a discount, and yeah, you're paying interest for it. And if you want to take an in-depth look on the numbers, I actually created a video about 3 weeks ago, and I'll put the link in my description if you want to check it out. But if you're thinking about selling a home, unless you absolutely have to, don't do it. It's a hot take, but you're going to get less for your home today than you are 6, 12, 18 months from now. I really don't know. I wish I could tell you how long it'll be before house prices come up, but I can tell you that they will. As soon as interest rates come down to a more acceptable rate or a more normalized rate, house prices come back up. So yeah, interest rates, they fucking suck.